brand new measure of inflation and how far you can stretch your dollar. This morning's new numbers deliver some good news. Inflation did not rise as much as expected. Last month, the Consumer Price Index held steady at 2.7%. That's compared to last July. And it's the same inflation rate as the month before. Let's go to CNN business and politics correspondent Vanessa Yurkevich. Vanessa, what does this new CPI number tell us?
Well, it shows us that inflation really held steady amidst these historic tariff levels that we have not seen since the 1930s. As you mentioned, Wolf, on an annual basis in July, inflation up 2.7%, and on a monthly basis, inflation up 0.2%. That's really a mirror image to what we saw in the previous month of June. Now, when we look at key categories that we track regularly, energy, food, and shelter, take a look what happened here. Energy was down 1.1%, led because gas prices fell by 2.2%. Food, flat. So prices at the grocery store actually came down by 0.1%. And then shelter, that's what we pay for rent. We saw an increase there. That's the biggest share of this report, up 0.2%. But when we look at core inflation, we can see where the tariffs, where the price increases are starting to take effect. It was hotter than expected and the highest level on an annual basis since February, up 3.1% on an annual basis, up 0.3% month over month in July. Key categories that we have been tracking because of the tariff pressures are toys, furniture, appliances, apparel. You can see almost all of those up a little bit, except for appliances, which are down by 0.9%. I just spoke to the CEO of a major U.S. retailer who said that he's actually not surprised that prices are rising slower than expected. There's some feathering going on with prices where things can go up one month, things can come down another month. And Wolf, that is in reaction to the volatility around the tariffs, changing week to week, even day to day. But as a whole, inflation looking tame amidst these really historic tariffs, Wolf.
And Vanessa, it's, I think, important to point out that these new numbers come from the Bureau of Labor Statistics. That's the same agency that President Trump criticized without evidence of manipulating numbers to support Democrats. But will he be happy about these new numbers?
Well, Wolf, we'll wait for that Truth Social post to see if he is indeed happy. But he didn't just fire the commissioner of the BLS. There have been a lot of layoffs at the Bureau of Labor Statistics, the people who are involved in collecting this inflation data, so much so that they've suspended collecting data in 3 key metro areas and have cut back in surveys and collections in 15% of the rest of the country. So economists have said that this could be a little bit of a cloudy report, and we may see more volatility in the months ahead, Wolf.
Americans, Vanessa, are also dealing with record high beef prices this summer. And you had a chance to speak to the CEO of Omaha Steaks. That's the home delivery service. So what does he say about where these prices are going?
Prices in the month of July for beef have spiked up 2.4%, and on an annual basis, up 11.5%. That is some of the steepest price increases that we have seen in this inflation report. I did speak to the CEO of Omaha Steaks, who told me this has been a long time coming, and he's not sure prices are going to fall anytime soon. Take a listen to our conversation.
First of all, we're at the lowest herd size in 70 years. And at the same time, demand is an all-time high. I don't expect the herd rebuild to really start turning the corner until Q3 of 26. So, we're in for quite a long haul here until we start to see some relief in retail, grocery, and at other specialty providers like Omaha Steaks of beef costs coming down.
How is the beef market impacted by tariffs?
In ground beef in America, 8 to 20% is imported from outside the United States. Without foreign imports of lean trim, America could not support, at least today, America's demand for ground beef. So, that's why the price is going up, because the demand is there. And so companies that source foreign beef are incented to do it, despite the price.
And so you heard right there, prices continuing to rise and likely not to fall until sometime next year. Also, one of the prices that we've been tracking is coffee prices. That, along with beef, is on the rise because of weather conditions, but also because some of those significant tariffs put on our trading partners, like Brazil, a 50% tariff, Wolf, where we get a lot of our coffee. Wolf?
Good point, Vanessa Yurkevich. Thank you very much.
With us now, senior markets reporter for Axios, Madison Mills. Madison, thanks for being here. I first, just give us some context. Vanessa just laid it all out for us. What does this say to you?
Well, what's really interesting is we're seeing the stock market rallying this morning, and that's no surprise because investors have been very glass half full since really those lows that we saw back in April. But as your reporter just so smartly laid out, this is sort of a mixed print when you look under the hood. The core CPI that strips out some of the volatile sectors like food and energy, that came in hot, but the headline number came in cold. So for the Federal Reserve, how do you view these inflation numbers? Is it actually good news for the path forward on inflation?
And so what do you think? How will they internalize that because as they weigh any sort of rate cut?
Well, and I'm reading emails from sources as I'm on set with you
Yes.
right now, and they are telling me that this is a dovish print, meaning the Federal Reserve has the option to view this as an excuse to cut interest rates or as reason to cut interest rates. But then from Mohamed El-Erian, one of my favorite sources on Wall Street, a bond legend, he is saying that divergence between the headline and the core number, that's going to make it more difficult for the Federal Reserve to reach consensus. And then at the same time, you have the labor market numbers that came in a little bit rough in the last jobs report. And the Fed looks at unemployment and inflation. So they're in a very difficult spot right now.
Right, because they really have to take it all, big picture. And it sounds like, based on what Vanessa was saying and now how you're also adding layers to this, that it's really what you need to know about today is that there's the core inflation numbers and then there's the other data set. And those are two things that you have to take them all together.
Exactly. That's exactly right. And it points to the challenge for the Federal Reserve because of that dual mandate of employment and inflation. And we've seen them kind of talking about how they're favoring inflation. You hear Fed Chair Jay Powell talking about that 2% inflation target time and time again. But when you start to see cracks in the labor market, if those get more severe, you could see the Fed transitioning to focus on the labor market and cutting rates to protect that labor market. And then, of course, we also have the tariff zooming in the background here and whether or not that's going to lead to any further cracks in the labor market as well.
And also, too, as Kate mentioned, the Bureau of Labor Statistics, has had their chief statistician fired because Trump didn't like the numbers. Their reaction will be very telling today. But just as someone who reads these numbers, the risk of politicizing these numbers has to be high.
It's certainly high, and that's why it's been so critical historically to have a nonpartisan Bureau of Labor Statistics. It's not just important for consumers who are understanding the economy. It's important for traders. It's important for my sources on Wall Street who are trading, inflation-protected securities to trust in this data. It's very critical for global markets. So that's certainly going to be something we're covering going forward.
All right, Madison Mills, thank you so much.